It has been reported that Richard Clarida has been trading on information that he was privileged to as the vice chair of the Fed. And in this video, we break down exactly what happened, why this is a pervasive, persistent issue in the halls of power, and our bull and the bear case for the future of the Federal Reserve.
I'm Hannah, this is Erin, and you're watching the Piper Rundown. We analyze business and culture to help you win. We are on a mission here on the Piper Rundown, and it is to help you build a better business brain. And we think you can do that by smushing the like button. We have a really interesting rundown for you here today. We covered a story back in September of last year about the Federal Reserve getting a little janky with some stocks. There was a little scandal, and you can watch that video. We'll have it linked down below. But we have somewhat of a follow-up, don't we, Erin?
Yeah, unfortunately, in US politics, in politics in general, stories of corruption don't really have a final chapter. They just continue to unfold as the boomers, and I guess there's other generations, but it really feels like the boomers are just putting their backs into taking the mantle as one of the most corrupt generation of leaders that this nation has ever borne witness to. That last one, to quickly summarize, Fed regional presidents, Eric Rosengren and Robert Kaplan, were both trading their personal accounts, day trading the market, while simultaneously being privy to the most influential financial policy decisions in the entire market. For those of you that are market newbies, the Federal Reserve, which dictates policies around monetary creation, interest rates, is highly influential because not only is the US dollar the world reserve currency, but the US market is the largest by a significant margin financial market on the planet. So when the characters who are supposed to be regulating said market are privy to the policies like interest rate cuts that will impact everything from bonds to real estate to equities, they are sitting on very privileged information, and in a basic boundary of ethics should not be able to trade on that information before the public. Both of them were caught guilty of doing so, and we have now learned, thanks to reporting by both the Financial Times and the New York Times, that the vice chair of the Fed, the second most powerful person in the entire entity, Richard Clarida, has also been trading on that information. Now, previously, Hannah, he disclosed that on Thursday, February 27th of 2020, he had moved somewhere between $1 to $5 million from a bond account into an equity account. That was already pretty darn fishy because of a disclosure that the head of the Fed, Jerome Powell, made the following day. But what we have learned now is that he had just sold a very similar quantity of that equity account on Monday the 24th. So he had this 3-day window, and he in his public language has said he was rebalancing, but no financial advisor ever in any way, shape, or form would tell you that the way you rebalance is to sell a specific thing that you were holding and then 3 days later turn around and rebuy the exact same quantity or with the exact same amount of value that specific entity. There is no rebalancing, and please correct me if I'm wrong in the comments here. There is no rebalancing strategy that looks like that. So it's pretty darn damning, and just really convenient that his term happens to end on the 31st of January this month. So I'm sure that this disclosure in the final hours of his term as the vice Fed chair, he's being replaced by Lael Brainerd, has nothing to do with it. This is just a funny coincidence.
Yeah. Oh, absolutely not. Definitely smells a little bit fishy. Do you have some numbies for us, Erin?
I do have some numbies. So On Friday, the 21st of February, back in 2020, the S&P 500, which is what these guys tend to be trading in. They're in REITs, they're in index funds, they're still in generally broad stuff, although Kaplan was trading like specific equities, Boeing and Amazon, which is just freaking ridiculous. They tend to be in these different indices to be able to kind of hand wave at a general lack of bias towards the investments that they're in. That was at 3,330, and it started a very precipitous fall on that Friday. On Monday, there was a lot of anticipation. Even Sunday night, there was all this anticipation that the forward futures were showing steep sell-offs across all markets because people were really afraid about contagion, and there was not much known about COVID generally. That is when Clarida decided to sell. Wednesday of that same week, he had a call with the board of the Fed and all the regional presidents. Inevitably, in that meeting, some decision or clarity about what the Fed was going to do had to have been arrived at. Thursday, the next day, he buys right back in to the equities that he sold. So I'm sure that other things would have been being digested in terms of data that would inform your investing decisions. But in a world where everything was looking negative for equities, there was a significant down spike and they lost 12%. The S&P lost 12% of its value in that intervening 5 days. One instance where you would have found material reason to become bullish on equities had to have come from that meeting. I understand there's a lot of hearsay, there's a lot of allegedly in what I just said, and they're going to dance around that, oh, well, at the time it wasn't in breaking with any ethical rules of the Fed. I don't care. It's horseshit. Because the next day, after buying, Powell signals to the market that the Fed will strongly consider a rate cut. And we've talked about this in the past on this show, but we're going to do it again. When interest rates are cut, what it does is make the safest assets, the ones that could potentially offer some yield but have the highest likelihood of getting paid back, less attractive to investors. It pushes investors out onto the risk curve to potentially serve as a ballast and a pool of liquidity for stuff like equity that is dropping in value. If bonds completely lose their relative yield in your portfolio, then something that seems relatively safe and resilient to a pandemic, Home Depot, Starbucks, McDonald's, becomes a more palatable investment, and investors who are forced to feel that way can serve as a ballast to the market. So, very simply, he was privy to this information, decided to jump right back into the same equities, and calls it rebalancing. And this is now happened by the vice chair, multiple regional Fed presidents. It has required a vast change in the ethical code for the Federal Reserve. And to get really meta here, my generation, the millennials, are much maligned for lacking public trust, for lacking optimism, for lacking a real sense, and the Gen Z are even more extreme in this regard, a sense of public duty or patriotism in the face of the modern world. And it is events like these that make it really, really hard to be proud of the country, to be, admire any of the leaders involved on the right, the left. Like, it does not matter. It is consistent that behavior is perpetuated like this by all of the most powerful people in the federal government. And I'm dying to be proven wrong. I would love to have someone to point to that is evidence to the contrary, but I have yet to see that person step forward.
Yeah, it's quite disheartening. Interesting spin on the numbies, Aaron. This is a slightly different story than we usually cover here on the Rundown, so we would ordinarily move on to the comps section. Do you have anything for us there?
I have two comps. If you're struggling to just follow along with the story generally, one of them is Martha Stewart. Martha Stewart went to jail for months because she owned a biotech stock, ImClone, and decided to sell it in advance of some bad information coming out. Now, Martha Stewart is someone that teaches people how to cook meals and prepare their home. Yes, she was famous. Yes, she was on TV, but she was not a public servant. We are talking about people that have sworn an oath, who have an obligation to the public and an explicit ethical code, in addition to all legal frameworks out there, to not be trading on insider information and benefit from their privileged position. Martha got a tip because she was famous, because she probably had a lot of assets under management, and whoever she was working with wanted to help her maintain that wealth to some degree. This is substantially more egregious than anything that Martha Stewart did. In fact, it's a lot more like what the current Speaker of the House, Nancy Pelosi, has been doing for the entirety of her career in Congress. She is one of the most effective day traders of any human on the planet, and I reckon that it has something to do with her similarly privileged position of material, non-yet public information that she has access to as the Speaker of the House. A classic example of this is her buying optimistic investments on Microsoft shortly before they were announced as the winner of the $10 billion JEDI contract with the US Pentagon. This is what our leaders do. They do it in Congress, they do it in the executive branch, they do it all over the place. Regardless of being on the left or the right, this entire generation is disappointingly corrupt.
It's especially, I don't know, it's just, you kind of got to throw your hands up and realize you really can't do anything about it. And it's just going to keep happening because these people, they just get slaps on the wrist, right? There's no real consequences for shit like this going down.
Yeah, what happened to Rosengren and Kaplan? They
Right.
resigned. They didn't even get fired. They
Right.
resigned. One of them
Yeah.
citing health issues, one of them citing to be with their family. Conveniently, Clarida's at the end of his term at 31. You know, it was a good run, but I'm excited for Lael Brainerd to take the reins. It's like, okay, cool. And no one cares. This is so opaque and so like beyond the purview of most people's day to day that, yeah, they just get to walk. They get to walk right back to their mansions and enjoy it.
It's extreme. I said this before, but it's just extremely disheartening. All right. On that note, on to the meme factor, where Aaron and I rank the memeability of a story on a scale from 1 to 5, 1 being negative memes. I know where I'm leaning with this one. 5 is all the positive memes. It's 3, and 3 is right in the middle, completely neutral, no feelings towards it at all. I mean, this is like a 0.8 story for me. Like, I could not have more negative feelings towards this. I also think it is extremely memeable. However, it's not taking over headlines. I feel like it should be. But yeah, I'm going 0.8 for this one.
Yeah, I'm going 2.4, partially because I think the Fed is already held in pretty low esteem by any competent, acute market observer and finance thinker. And I just don't think this is going to change anything. Like, if it was really bad, it would be like, wow, things are really going to change. I don't think anything's going to change. I think it's way closer to a 3, which is just kind of status quo, meh.
Yeah, I guess we kind of got a little hint of the bull and the bear case there. But before we move on to the final segment of the rundown, make sure you hit subscribe. It really helps us out. And we cover fascinating stories like this multiple times a week. We constantly have new content dropping here on the channel. Hit subscribe so you don't miss it. All right, on to the bull and the bear case of this wild story.
The bull case is that Powell has announced a change to the ethics code. It's now going to be 45 days to get approval for a trade. There are less options what you can even trade in. It's mostly mutual funds, broad indexes. So it's going to be less straightforward to do this type of insider trading. So I guess maybe that makes this a less appealing post for the most sociopathic and corrupt individuals that seem to be finding their way into this organization. Yeah, really hard for me to come up with even more of a bull case and sell it. On the bear side, I think there's some really compelling arguments about a world where there is no central monetary authority. So this bear case is the bull case for stuff like Bitcoin. The people that look at all this and say, I'm out, opt out, get into a hard money that's programmed that way, that is not even really, there's just no board managing Bitcoin in this way that the US dollar is being managed by the Federal Reserve. So it's bullish for Bitcoin, which is very bearish for the Fed if that expands in its relevance and efficacy. I'm less and less optimistic about that world, though, because I don't know. The crumbling of all institutions sounds good to some who feel insulated from a more volatile world. But the reality is a volatile world is very hard on a lot of people. And so the bearishness is I don't see how this doesn't lead to more instability and more volatility, which inevitably puts a lot of people in the crosshairs that didn't choose to be there.
Fair enough. Well, that is the rundown. Kind of a depressing one for your Monday. Sorry to kick the week off that way, but these are the things that you need to know, and that is why you're subscribed to this channel. And we'd like to shout out...
You can thank Richard Clarida. It's not us. You can thank Richard Clarida.
Exactly.
Put his face up there. This guy.
Yes, don't shoot the messenger. In fact, subscribe to the messenger, please. We would like to shout out a commenter from a recent video on our Verizon sells Yahoo and AOL video. That's kind of an old one, but pretty cool that we're still getting action on it. S. Silva says, "Good work, guys." Thank you, S. Silva. We appreciate you. Thanks for watching to the end of the rundown. If you're not subscribed, please do so, and we will catch you next time.